Good morning, good afternoon, and good evening, and welcome everybody to our webinar. We are extremely excited to have you here. I think we've got a great webinar again for you. We just did a fantastic one on Tuesday about Cloud for Treasury. Hopefully some of you had messaged me about joining it, so hopefully you were able to join. We're going to be talking today about the top 10 lessons, project lessons. So as you all know, Bramasol is the leader in finance compliance and finance transformation. And we're going to talk a little bit about some of the lessons learned. We're going to focus heavily on leasing, but we are going to talk to you a little bit about how those lessons might apply to any of your compliance projects, whether it's RAR, so IFRS 15, IFRS 9, so you can assume that that's the case. And we have a great team here. We have Julio De La Costa, who's the Director of Technical Accounting, John Scott, who is one of our technical accountants, and we have the lovely Carrie. Hello, Carrie, from our solutions engineer. She's a senior solutions engineer with our team. So let's get started. A couple of quick reminders for everybody. We are recording the webinar. This one will be up within about 24 hours or so. We'll have it up on the website. You are welcome to ask questions. In fact, we encourage you to ask questions on the website. A reminder, feel free to ask any question you want. We will be addressing primarily the questions like, well, can I do this? Can I do that? More technical questions around things like, well, how do I do X, Y, Z? If we can answer them quickly, we'll do that. Otherwise, we will follow up with you. You can download previous webinars from our homepage. There's our brand new homepage. I encourage you all to go check that out. We have some new content on RevRec, Treasury, Leasing, and S/4HANA. So you can go up there to the Resource Center, check out the content, or you can go down here, right down to the webinar section, and you can see right there you could have registered for the webinar, and as of tomorrow or so, you'll be able to watch it like you can see the one there for the cloud for Treasury. Love to have you contact us. We'd love to hear from customers. Many of you follow up with me, those who can attend and those who cannot, with questions afterwards. We'll be doing 3 more webinars next month. One of them will be heavily focused on more detailed dive in on the disclosure reporting. So look forward to that. I believe that one's going to be on October 24th, but look for some more info on that. Join us on some chat with Facebook, and of course you can join us on the website. We're going to talk a bit about the top 10 lessons. We're going to start with that. We're going to have our experts dive into that, and I think what's going to be really kind of fun about that is the guys have come up with a really interesting format. You're going to hear about lessons learned from actual projects, actual customer projects, and then you'll hear kind of a mini case study, the application of that. So that'll be kind of fun with that. And then we're going to dive into the disclosure accelerators. We've been getting a lot of requests and information about our accelerators. These are designed to help you really get up and running quickly with your disclosure reports. And the great thing about them, and we'll talk again and reiterate this, is Julio and Vivek and the whole team have designed these reports not from the perspective of what does the software do, but really designing them backwards from FASB. Really looking at the FASB and IASB, designing the reports to meet those needs and figuring out how to work within the system to do that. So we'll talk about the RevRec, we'll talk about leasing, talk about some of the issues there, and then disclosures from Bramasol and a quick wrap up with that. And we'll show you a little bit of screenshots, a little teaser for you for next month's webinar. So Julio, my friend, I am going to turn this over to you. Take us through the top 10 lessons from lease accounting projects.
Thank you, John. Good afternoon, good morning, everybody. So we've been doing lease accounting projects for the last couple of years and revenue recognition projects for the last 4 years. So we decided that it would be a good idea to really understand what have we learned as a company when we get into these projects. More importantly, it's a technical accounting side that is bringing a lot of value to these projects. So obviously Bramasol is known as a system implementation partner for SAP, But now, in the last 3 years, we've really added some new services in the technical accounting space, where as we go in as a partner to the customer, where we add not only technical accounting options, but technical accounting advice, giving customers what we have seen on different projects and best practices in the industry. So from that, we decided that we would give the audience today a top 10 lessons learned from our lease accounting projects. So from 1 to 10, we're going to go through each case study, and we have real-world examples of projects that we've actually worked on, so we could give you some insight on what really happens on these projects. So John, you want to start from next slide?
Sure.
So the first thing is, and as John always says, nobody ever came to us and says, oh, we should have started this project 2 months later. We always tell people, you have to start early. You know, our experiences really show us that the earlier the implementation, the easier, more efficient, and less costly it was. We understand now that the FASB has basically deferred private company implementations by 1 year. What does that mean? That means that the response back from adopters has been, the lease accounting standard has been just very complex, and there's no consensus among the big four. So therefore, the AICPA went to the FASB and asked on behalf of their customers if they could get 1 year of a deferral. But just because you have another year, it's a good idea to take advantage of it and start the process now. We always say in these projects, because they're really accounting based, you have to do your accounting first, and then you decide upon your software. Some projects we've worked on, you know, we've done it in unison, the accounting as well as the IT implementation, but our best practice is really to start as early as you can with what we call the 3 Ps, which is, what is your new process going to look like? What is your new accounting policy going to look like? And how you as a company will roll out the people aspect, which is the training aspect of that. And I think the last bullet really is that companies have really underestimated the level of involvement in the adoption of not just lease accounting, but revenue recognition. It seems like the FASB is coming out with new accounting standards every 2 years, and companies have been bombarded with not just revenue recognition. We still have calls right now where companies are asking for revenue recognition help. So leasing has been just tumultuous in the double implementation of 2 very complex accounting standards. With that, we wanted to give you a real-world case study, and I'll turn that over to John Scott, who's going to give us some insight on our project. John?
Thanks, Julio. As Julio mentioned, we've been involved in a lot of ASC 606 and 842 implementations and gathered a lot of lessons learned. The first one is about starting early. We did an installation at a plastics manufacturer, arrived, they thought they were ready. Once we started talking to them that day, we realized they haven't done some of the basics that you need to do in order to implement 842 software, which is what? They hadn't properly assessed their lease population. They didn't know where all their leases were. They hadn't fully fleshed out all their policies. The second P is Julio mentioned, which what does that include? What do I do with short-term leases? How about capitalization criteria based on materiality according to 842? What about non-lease components? What about those? And it goes on and on. Those things have to be decided before you do an installation, because it affects how the software is going to be set up and what information you're going to put into it. Additionally, you need to identify all the fields that you're going to be using for the implementation, because there's a lot of information you have to pull from these leases in order to be GAAP compliant. So that led to us pulling out of the field, having to come back a few months later and incurred extra costs for the company. That's the lesson to be learned. Julio?
Yeah, okay, real quick comment there, guys. Real quick comment. I think also, John, I think you and Julio experienced the aspects of making, when you talk about these processes, procedures, and people, also, another aspect is deciding whether or not you're going to centralize or decentralize. Any thoughts on that relative to starting early, John or Julio?
Yeah, so
Sure, this is John. I'll chime in
yeah,
on that.
go
I implemented at a large healthcare company, very decentralized. They made a decision, hey, we need to centralize these. There's a lot of decisions to be made on these leases, particularly when we get going here a couple slides later on embedded leases, as well as gathering all one common repository. That's kind of the decision that was made there. Julio?
I was just going to say that especially in multinational environments, it's very important. And what we've seen is some of our customers actually, most leasing operations traditionally usually are decentralized, John. And as part of the adoption of ASC 842 IFRS 16, we've seen some companies make the effort to actually centralize. And then the next question you're going to ask, John, is why? There's a reason for that. And the reason is a lot of companies, they don't have the visibility and the transparency of knowing where all my leases are, what's the spend, especially if you are far-flung all over the US, international locations. So really by the adoption, it leads to what you talk about, John, all the time, comply, optimize, transform, in an optimization of your accounting processes. By having that centralized function, it's going to lead to more visibility, potential cost savings, and definitely more efficiencies in your processes as you go forward. John?
Yeah, and as you've said, we've noticed, Julio, in the treasury projects that we're doing now, a lot of companies are choosing that process, either centralizing in terms of global centralization or regional centralization, because the impact on treasury is also big. Think about the banking relationships and the decisions you want to make around things like, if you want to implement something like payments on behalf of, you have to think about what that means from a centralized, decentralized, and all of those. The point being, you want to start early because there's a lot of policy and a lot of procedure aspects to that. So,
and lastly, cost. The more you centralize, the more your cost goes down.
Yeah, absolutely. Okay. So I'm always amazed at this one, Julio, is your know where your leases are. I love this one.
Yes, this is a very common issue that we find in almost all our projects. Know where your leases are. So unlike revenue recognition, which is really a technical accounting exercise, the idea of ASC 842 adoption, while not as complex in the technical accounting arena, it's more of a data collection exercise. And what you know by now is your auditor's number one question will be, do I have a complete set of leases? Because completeness, one of the basic accounting assertions, is the key driver in this type of project. As we know, leases are all over the organization. We've seen leases in companies' hard drives, in desks, in drawers, in file cabinets, and sometimes leases leave when employees leave because they have their leases on their computers. When that employee leaves, those lease information goes away. And as the last point really says is, the more decentralized an organization is, the more challenging it is. And the reason why that is because part of the standardization process of 842 IFRS 16 adoption is understanding not just where my leases are, but how they fit into the organization going forward. Now I'll turn it over to John Scott again, who's going to give us a real-world example on a project we worked on not too far from his house over there in Dallas. John?
Yeah, absolutely. Thanks, Julio. Here's another one, an oil and gas services company. They thought they had their complete lease population, then come to realize, wait, there's 100 leases stuffed in somebody's drawer, as Julio mentioned. It's a big thing. And as Julio mentioned, external auditors are going to be all over completeness. And what's the way to get around this? I recommend you take your maturity table, which really has been historically audited, it's got what the auditors think is a fairly complete population of your operating leases, and compare those payments per that maturity table to your lease accounts. And that gives you kind of a quick and dirty way of estimating that you're really close to having a complete population. Now, the company I kind of work for went a little bit above and beyond, and they pulled all the detail from lease accounts for 1 quarter and compared it to the maturity table. And they also did a search for the word lease in other accounts to look for miscodings, which, you can go on the gamut, but either way, you want to be able to identify all your leases and then show the auditors you've got a complete lease population and can support that. Julio?
Yeah, John, next slide. So data collection template, complexity abounds. What do we mean by this? So we just talked about in the previous lesson learned is ASC 842 adoption is all about data. It's all about understanding what data points are required to capitalize and amortize your leases. Because we know the change from 840 to 842 accounting standards, under 842, it requires you need to basically capitalize your future payments, you present value that back to today, and then you amortize over the life of the lease. So as opposed to your regular debit expense, credit cash under 840, this is a whole new process where you need to make sure that you're collecting all the right data points the first time. And it's going to be very important because you don't want to repeat that process. Based on that, I'm going to turn it over to John Scott, who's going to give us a real-world example where we worked on a company down in Houston that actually encountered the same data challenge. John?
Yeah, thanks, Julio. Here's another study where, they thought they had all their data requirements nailed down. Obviously, they didn't. They had to look at the leases 2 times. What happens there is a lot of unnecessary cost. You only want to look at these leases once. So what I would recommend to get around that is 2 things, actually 3. First, make sure you've got all your fields in accordance with GAAP and that you've run it by your external auditors and they agree that's a complete. Secondly, you want to make sure you got all your leases in one central repository. And third, I might even go to the business and say, do you want to add other data fields that you're going to be using for analysis purposes? You'll see later in our presentation, we've got some analytical tools that can be used with 842, which will help you do all kinds of good stuff. So the key there is only want to look at these leases once, have it all nailed down your fields before you start going through and collecting all that data from these leases. Willie, you got anything to add to that?
Yes, so if you think about ASC 42 adoption, you really have 2 different processes going on at the same time. So there's the accounting process of being compliant with 842, but then there's so much data, there's so much rich data, understanding where your leases are within the company, creating all these data points. And what we find is companies start these projects with, okay, I just want to comply. But then when we go in and explain to them and show them, here's all the 25 to 50 different data points that you're collecting, a light bulb goes off. And they say to themselves, wow, now I have all this transparency in my new accounting process. What else can I do with this data? So you can look at things like space management. You can look at efficiencies in, do I have the right people in the right location? Or maybe I can move a lease from one location to another, save cost, and maybe it's more optimal for people having people there or vehicles or what have you. So I think the point of this lesson learned is don't underestimate the data collection process. Start early, have a good collection process, and like John Scott just said, do it once. John Froelich,
Yeah, Julio, when I listen to these projects, and we've done dozens of them, and you and I join the same calls every couple of weeks with some of the world's largest companies about lease challenges. And it always amazes me about the complexity. I think we underestimate the simplicity sometimes of, well, I just lease a car. All right, well, yes, you do just lease a car, but if it's a fleet lease, where is that car assigned? What business unit does it belong to? Do you have a dynamic allocation of that asset to that unit, right? So in the case you talked about, real estate as a dynamic asset, when you can do a drop-in desk. Imagine that I can show up and I can do a drop-in desk like a WeWork. And what does that mean? And how do those play into it? But also allocating things like, then how do I allocate common area maintenance? How do I allocate space? And how does that get pulled out? And it requires you to separate that data apart. But by separating that data apart, you now have, as you pointed out, that insight that comes from being able to do, like we talked about, the comply, optimize, transform, right? You're starting with, my goal was to comply, create a set of data, comply, and then you begin to look at this data and say, wow, how could I optimize my processes within that context? How can I use this data that originally was very complex, but now provides me insights? And whether it's, we talk again about ASC 842 and all of that, but whether it's that or the work that we do around revenue accounting and revenue recognition, there's another great place that you can see that. So it's that complexity, and it amazes me, just how much more complex it is than we thought. So, and by the way, because it is that complex, companies like Bramasol have come up with templates, this data collection template. And I know John and Julio and the rest of our team have worked hard on creating templates based on dozens of projects and have a way to kind of jumpstart that collection process. And again, that's a critical tool to your effort. Julio, we'll move to abstraction, which is another fun aspect to this.
Yes, John, thank you. So lease abstraction, this is one that is normally underestimated by every project we've worked on. What exactly is lease abstraction? Well, let's say you have a 1,000-page lease. Somebody has to actually take the time to read through those 1,000 pages and abstract all the necessary data that's going to be required. Remember, what we're doing under 842 and IFRS 16 is we're taking future payments, we're capitalizing it and amortizing it. Therefore, you need a begin date, you need an end date, you need payments, you need lease expense, you need interest expense, interest rates. It's very important that companies understand who is actually going to do this, because it takes some leases, it takes 10 hours, some leases it takes 15 minutes. It just depends on the leases and the volume. So what we've always advised our customers is we ask them on day one, who is doing the lease abstraction? And then most companies say, well, we would like to save costs, so therefore we're going to have our internal staff do it. Well, most companies in today's day run very lean. Therefore, they have a full-time job. So when exactly is that staff going to do the lease abstraction project? So that leads us into the next case, which is if you don't have the internal staff to do it, then you probably have to budget hiring a consulting firm to actually come in, read all the leases, abstract all the salient points that is needed for ASC 842 adoption. With that, I'll turn it over to John Scott once again, so he can give us a real-world example where we worked with a large pharmaceutical about the data abstraction process. John?
Yeah, thanks, Julio. So here's another case study. A large pharmaceutical company. They thought, like Julio said, oh, we can do this all ourselves with the couple people we have. But as Julio mentioned also, unless you know how long it takes to do each lease and do the math and multiply them, say like you got 1,000 leases, you're talking a big chunk of time to get these leases extracted. The company I worked for, again, just a segue on this, had a lot of complex leases that were identified during the assessment process. Well, now it was taking them 4, 5, 6 8 hours per lease, and they had 3,000 leases. So you can imagine the effort that was going to be required there. Also, additionally, as Julio also mentioned, it's a great idea even if you're going to use external resources, but identify the need for that early. But come up with some scripts, be able to hand them to people and say, hey, here are the paragraphs that you should look for to extract this important information to be in compliance with all the gap data fields you need to put into your lease software. That prevents huge cost overruns, and also you're going to be shocked at the time it takes to extract these leases and how much time it's going to be. So start early. Julio?
John Furlick, any comments on that one? You've seen a lot, haven't you?
You and I have been down this road with a couple of companies. I've seen a lot of this. I agree with you 100%. And even for those people who think that the answer is machine learning and OCR tools, our experience has shown the OCR tools only start at a best at a 60, 70% accuracy level. And to get you to 90 some odd percent is an effort. And don't underestimate the amount of effort. I love what John said about that matching. I call it kind of the lease data lexicon. If you can help companies, whether you choose to use people, like, we have a great team in here that we've worked with in the past in India, or you can use a machine learning tool. All of them will require lexicons to help you translate and look for these paragraphs, but also say, hey, start date equals beginning date equals whatever those dates are and numbers are in another language, and those dates look like this. And so the more that you're able to create that, the better off you'll be. So yeah, we've seen a number of companies who either postponed projects, B, canceled projects, or were so overwhelmed by the concept. I think, Julio, you and I ran into one that was so overwhelmed with the concept of lease abstraction, they said, well, I guess we'll just have to suffer with spreadsheets because I just don't want to do this lease abstraction thing. And of course, that's the biggest mistake you could possibly make.
Correct.
Yeah, and I'll add something else, John. Also, don't underestimate the time that somebody needs to go quality check the abstractions. It's one thing abstracting them and getting them all in, but somebody needs to, on a test basis, and your auditors are going to ask this, did somebody quality check these and be able to say that the quality of the extraction is there?
Mm-hmm. Great point. Thank you, John. So our other lesson learned is treat the projects, whether it be revenue recognition, whether it be lease accounting, derivative accounting, hedge accounting projects, treat it as a holistic project because it not only impacts accounting. When we talk about lease accounting and adoption of ASC 842, on the screen there, these are all the groups that touch lease accounting. It's almost very similar when you talk about revenue accounting as well. It impacts not just accounting, it affects billing. The ASC specifically, it's going to affect your real estate team, procurement, because procurement is the beginning phase of your leases. Usually the legal department, they're the ones who get the lease first to review. And then it goes into the accounting, goes into financial reporting, SEC reporting teams. And don't forget about your auditors. Your auditors, they will have a very large say in the adoption of your 842 project. And lastly, once it's been implemented, your Sarbanes-Oxley or internal controls team will ask you, as we talked about the 3 Ps, show me your new process, show me your test of design, show me your test of operating effectiveness, because as we know, any new process, especially in a public company environment, has to pass those 2 Sarbanes-Oxley compliance tests. So we always encourage our customers, don't just keep it in the accounting department. You need to bring all stakeholders in and make sure that everybody has an early and a valiant say in this project. I think it's going to save you a lot of time, effort, and pain if you do that early on. John Scott, any comments on this one?
No, I mean, you're right on. I mean, you need to get all departments involved because that not only affects the data points you're going to be extracting, because legal or real estate may want additional data points to be able to do some analysis on these. Your SEC reporting group is going to want to have data in certain formats that makes it easy for them to do the footnotes and the financial statements, et cetera. So this is a great point.
And I would add to that we always talk about SOX compliance, but Julio, you and I have been on a couple of calls with different customers. Remember, we had one in New Jersey who was insistent in several on SOC 1 and SOC 2 audits and compliance, and you need to be mindful of that process. If you pick an integrated program like CLM from SAP, that's one thing, and that you get that, but you need to be aware of that because your auditors, in some cases the government and others, will ask you about your SOC compliance, and you need to make sure that you are compliant because it's about data security. In some cases you're providing information that's not only relevant to the assets themselves, but there's bank account information linked to it. There's a lot there. So.
Yes, sir.
And then of course you also, we talked about IT, real estate, procurement, accounting, but as you and I both know, and as Bramasol continues to build our practice, expand our practice, Treasury needs to be involved. Don't forget the guys who set up the bank account relationships and manage that process as well.
Of course.
Communications.
Yes, obviously communication, and we like to say over communicate. But I think more importantly, the key takeaway here is treat this as you do any other project within a company environment. We like to encourage to have a steering committee, usually is managed by or blessed by the CFO or CIO. Obviously we in Bramasol, when we come to our projects, we bring in the aspect of a PMO organization. Why do we do that? Because on all our projects, we seem to get a lot of success by bringing in a project manager. What does that project manager actually do? He or she actually comes in and keeps everybody on task on a daily basis, weekly basis. In some projects I've seen an hourly basis. And once you have that process in place, you're always communicating to the steering committee, to the team members, and you're having an updated, maybe weekly status update. Why is that important? Because it's going to help us identify what our checkpoints should be, where our obstacles are. Because the last thing you want is you spend 9 months on the project and then you come to the 9th month and you realize, yes, we have run over budget, but we don't know why. We have 3 months to go and nobody can give us a real explanation. Having a PMO involved in a project environment really helps to keep the project on task. John Froelich, I know you're big into the PMO project. Give us some insight here.
No, absolutely, because it's the glue that guides everything together. Julio, you're spot on. Projects that don't have project managers are like ships without a helmsman. They're the person who every day is guiding and steering the committee, steering it forward. And so many times we see projects that get off track from that. So, absolutely spot on. And they're also the ones who can help guide the change management. I believe strongly in that process too. So clearly.
Yeah, and the only thing I would add in here is communicate with your auditors, keep them informed of all the key decisions you're making, what you're doing, and also start documenting this early, because you're going to want to write an implementation memo on key decisions made, what your policies are, how you handled completeness, how you handled embedded leases, etc.
Yes, sir.
Absolutely. Absolutely. Our favorite, embedded leases.
Which happens to be the next topic.
Does indeed. Prepare for surprises, and there always are some.
So embedded leases. This is the Achilles heel of any lease accounting implementation project. This is because the way ASC 842 was written, some of the guidance has changed. So we all know there are two components of what a lease is as defined by ASC 842 and IFRS 16, which is it's an identified asset, But more importantly, does the entity have control over it? If the entity has control over it, it's an embedded lease. So what we've seen on projects is really there are a lot of service arrangements that are deemed leases. There are a lot of service and supply agreements that are deemed. When I talk about supply agreements, I'm talking about logistics. Let's say you hire a company to deliver something for you on a daily basis. If that company purchases a van, that van could be considered an identified asset, and you may have a lease on your hands. To dwell further into this topic, I'll turn it over to John Scott again to give a real-world example of a potential error that happened at a healthcare company he worked at. John?
Yeah, this is a good one. It's near and dear to my heart. Embedded leases are pretty complex, and you don't know they exist because, as Julio mentioned, you really weren't concerned as much because you were expensing anything. That's an operating lease, and so part of that, if you misclassified the embedded lease, it was just being expensed anyway. Now it needs to come onto the balance sheet if you identify it as a embedded lease. And the transition practical expedient doesn't excuse you from not having to go back and look at errors you made in first looking at these leases. So you got to go look at them. Now, what I suggest is this healthcare company didn't realize there was so many out there. Now, we did a survey, which is a good thing to do. You survey the business, give them a little bit of history on what an embedded lease is, and tell them, okay, give me a list of leases you think might fall into this criteria. And on a centralized basis, you want to gather those leases and look at them from an accounting group, because you don't want those decisions being made by just people in the business that don't have in-depth 842 knowledge. So what did this lead to? Led to having a look at 2,000 extra leases we didn't count on that potentially could have had embedded leases, which, as Julio mentioned, is getting control and using substantial portion of that controlled asset that you're getting as part of a service agreement or et cetera. So be aware of those. That's a big thing. You've got to prove to your auditors that you looked at it, it's not material, or that you went through and identified them. And if you did, you have to bifurcate that portion that's the embedded lease and put that on the balance sheet. Julio, do you have anything else to add on that?
No, I mean, I think this has been the challenge on all the projects we've worked on here in Bramasol. That's always been the unknown, is how many embedded leases do you have? And the whole point of it being an embedded lease is that you don't know until you do that search for accounts payable, general ledger for the last 12 months. You look at any recurring payments in your general ledger. If there's a recurring payment, you have to investigate it and then basically say, this is an embedded lease or not. That's the kind of audit evidence your auditors will be required to actually feel comfortable that you as a company have done a proper embedded lease search. I'll turn it back over to John Froelich, and then maybe we can talk about the next slide.
Yeah, and you know about Julio, I love embedded leases, just like when revenue recognition, I love variable consideration, because they're those topics that unless you've really been through the process and really investigate it, you might not understand what it is. You know, you guys, obviously you hit on banking, energy, oil and gas, healthcare, retail, restaurant, I mean, logistics, warehouse management and warehouses. It really depends on how you manage that warehouse. Do you determine where the product goes and where it sits, or does the warehouse determine where it goes? That can be the simplicity of the difference between control and not control. And a lot of companies don't realize that they have these leases. And imagine, here's a healthcare company, 2,000 potential leases. If all they were was $10,000 each, all of a sudden it's a $20 million hit. Well, maybe they're even more than that because it's bigger. It could be $200 million hit. Imagine that you've misstated. And of course, everybody loves nothing more than restating earnings, right?
The big R. Yeah, the one thing I add too, John, is you might want to get legal involved to rewrite these agreements to avoid embedded leases. That's kind of what ended up happening at the healthcare company. They go, we don't even want these kind of arrangements because that could lead to embedded leases. We're going to rewrite those type of agreements.
There you go. And those that goes to John, your point earlier on about this is not just an accounting issue. This is a policy issue. This is a business issue. People will make different decisions about lease versus buy, so all of that. And I think it's important that you understand to select the software that fits your needs. So many companies go and they buy the software on the cheap. They go to the guy who says, I can get this done for you in, it reminds me of name that tune in 5 notes, right? I can get this done in 2 months and for, $200,000. And the reality is, there's a lot that goes into thinking about that. Look at what the documentation and support is. Do they have and are they doing things in accordance with FASB? Has somebody looked at the software and said, hey, this software makes the proper accounting calculations, and those calculations go properly into the journal and are done in a proper way, and that when the software is updated, that there are no regressions. So ask your software vendor about that. Your software should have the flexibility to meet your business needs. Can it handle joint ventures, joint venture consolidations, mergers and acquisitions? Is it capable of handling, if you're an SAP customer, your journey from ECC to S/4HANA that everybody will take? How is that going to happen? And finally, integration into your ERP. That is absolutely crucial. We find more and more customers these days asking us about, well, why am I using this external system and I can't get the APIs to work? Every time something gets updated, it doesn't work properly. Or, I want complete visibility. I'd like to see across my entire system. I want to see where my banking relationships are. I want to see what my cash outlays are. I want to be able to see a real-time cash forecast and cash position. Well, that's only possible if you have true integration into your ERP. And of course, we'll tell you that SAP is the company to do that for you, right? You have the CLM product that is fully compliant. It's been tested by the Big Four. It does what's required. It integrates core into all of your finance areas so that you can maintain and do all of the drill downs and drill throughs, and it provides all of the different reporting needs. And with that, we're going to talk a little bit, Julio. At the end of the day, these accounting regulations weren't set up because somebody at FASB needed something to do. They were set up because investors and companies wanted visibility and clarity into these leases. You had companies who were out there leasing and using leases and off-balance sheet leases and off-balance sheet financing to hide things. And FASB caught up with them and they came back and said, no, we're not going to do that anymore. So maybe you can talk a little bit about the disclosures and really what's different about both RevRec and leasing in this disclosures.
Yes, sir. So, most companies have adopted ASC 606 revenue recognition. Private companies are still in the process of doing 842. However, I think if you look at this screen, it's really saying that there's a lot more to it than just adopting the standard. Once you adopt the standard internally, the only way your investors or the public is going to know that you've adopted the standard is by your financial reporting disclosures. And just as a FYI, the disclosure requirements are much more extensive, especially in ASC 606 revenue accounting, than any current standard we ever had. There's new data points. As we talked about the 3 Ps, there's new processes, which leads to internal controls. All these are being audited by the external auditors as well as your internal auditors. There's significant judgment required, so there's more documentation internally. That also means because of significant judgment, there's more documentation by your external auditors as well. So the accelerator to get this right has never been more important than we are seeing today. John, if you want to go to the next slide, where we can just give a quick overview of why would somebody choose a disclosure accelerator. And obviously we in Bramasol, we have them, not just for revenue accounting, but lease accounting. From our perspective, and I'm a CPA, and from my perspective, when I was on the other side, I wished I had a tool like this, because why? It's going to save time. It's increasing my efficiency. When you say you want to get it right the first time, that's very important, because we all know, being on the other side, is when you give your supporting documentation to your external auditors, if you don't get it right the first time, it causes rework. Rework causes more audit costs. We like to talk about the automation of the validation reporting. Why is that important? Because it's one thing to have a disclosure report with 5-line items. The next question you're going to get from your CFO and your external auditor is, where is this coming from? So we've actually automated our validation reports. And like we said in the next line, the validation actually speeds your auditor sign-off. We also don't look at disclosures just from a reporting perspective, from a compliance perspective. But we truly believe, and our customers tell us this every day, that they not only use our reports for compliance, they use it for operational, managerial decision-making process. So all these all these reasons why we truly believe that what we've developed here at Bramasol will really help the accounting team, the CFO's organization, and also the IT organization to do these compliance processes better and faster, which will lead you to more efficiencies in your operational accounting. John Froelich, any comments on this? I'm sure you have some.
You know me, Julio. I always have comments. No, I think you hit the nail on the head here. And of course, these accelerators help you get to market and get you going faster. It's a 60–70% we get you there most of the way. And again, as I pointed out, and we'll talk about, the reports that we've built, and you'll see in a second, are built from the outside in. We took the point of view, we used accountants, we took the point of view and said, what is the FASB requiring? What is IASB requiring? And how do you build that report? But what's also interesting is, and I heard an SAP executive once say this, and I love this phrase, turning compliance into competitive advantage. Because as Julio said, the information you get out of these disclosure accelerators and these tools and the disclosures themselves is really powerful information to help you drive your business. So let's, maybe you can quickly touch on these. I know we're running a little bit short on time. Touch on these, we'll move on. And I'd like to hear, like to open up the mic to Carrie, and we can talk about what it is Bramasol has brought to the table here.
Yes, this is simply a reminder of the key data points that you need to be in compliance with ASC 606. This should be standard information by this time. Just wanted to point out the statement at the bottom. A reader should be able to tell the specific nature of a company's operations by only reading the new revenue footnote. That came from the FASB themselves, and basically it shows that the data points required are so critical. Next slide, John.
Speaking of FASB,
if we move to the 842 requirement, this is the FASB example of what do you need to disclose as part of your compliance journey to be 842 compliant. This is coming from the FASB, and this is a good segue into Carrie's area, where she's going to show you a bit of a highlights of what Bramasol has done. Carrie?
Hi, thank you very much. Yes, so I am going to be showing you just some screenshots of 3 different reports that we have developed out there. And then as John said, we do have a deeper dive webinar coming up the end of October, I think October 24th. We'll actually have a live demo going into both the CLM leasing reports and the RAR revenue recognition reports. Next slide, John. Just keep in mind that all of the reports that we're talking about, that those are registered with SAP, and therefore ongoing maintenance and regression testing is included. So earlier in the webinar, Julio talked about, I think, that changes happen. So again, as the standards change, then Bramasol will be updating these reports and getting them out to all of our customers. Next slide. So what you're seeing here are on the top are the CLM, so the leasing reports. The first 2 are the disclosure reports, and then the 4 following are our validation reports. On the bottom part of the screen, you are seeing the revenue RAR disclosure reports, as well as, and again, there are additional reporting requirements with RAR, and then there are the management waterfall reports. Now, these are, our reports are in, this is S4. Obviously, you're seeing the tiles here, but we've also, they can be an ECC, deployed in ECC, and then that's important to know as you go from your ECC to S4 is the reports are going to transition with you, so there's no new implementation of the reports. Okay. Next slide. So as you saw in the PowerPoints, I think 3 before, where Julio showed you the report that was provided by FASB as I guess, a standard or recommendation. So Bramasol developed the FASB ASC 842 and also IFRS 16 report on the left-hand side using that model. So why reinvent the wheel? If that's what they're saying the standard is and the suggestion, then that's what we went ahead and leveraged. I know Julio's going to jump in here in just a second, but along with being able to cut and paste this, into your disclosures, we've also done the drill through drill 2 on the right-hand side. So on the operating lease cost there of 21 million, you're able to just select that, double click on it, and go into the details that are supporting that number. So we talked about, making your, I guess, your audits cleaner, shorter. Having this backup data is going to do that. So not only going into the detailed records on the top part of the screen on the right, but then able to select the contract, and on the bottom of the screen, you're going right into CLM, right into contract 105, and tying out the numbers. If you're looking at the interest, I just wanted to focus it on the interest for July 2019, the backup goes right from the detailed report right into the contract. That's and the amounts that are generated from CLM. So Julio, you want to spend a bit of time just?
I'm just going to spend one comment, Carrie. Every time we show this to the CFO organization, especially the folks who are responsible for doing the financial reporting for their 10Qs and 10Ks, the next comment is, where have you been all my life? This is exactly what they need, and this is why this has been one of the most successful projects we've done, where we are actually doing it for the accountants. Carrie?
Exactly. Well, and on top of that, I mean, it's okay. You talk about compliance. So, this report, you run it in March, and then again, you run it again, let's say in June. And what's changed? What contracts have terminated? Which ones have been extended? Which ones have been renewed that you didn't know about? And so all those numbers change, and you've got all the backup and the detail to support those changes. Okay. All right. Next slide. Now that was ASC 842. Now, just have a couple slides showing the, for 606, we actually have 2 for 50.4. We have 2 reports, A and B, because not only do you need to, and that's why it's got the B up there, disclose recognize your revenue during the period, which is part of 50.4, but also you have to disclose your impairments, which is brand new for a lot of companies. They weren't tracking those impairments. So what you're seeing is the fact that the sales contract 2577, is tied to your RAR contract of, I'm just going to do the 3 last numbers, 258. And then on the right-hand side, you're going right into the your revenue recognition report. So, or into RAR. So you have your report on the left-hand side. You're going into RAR on the right, and then right from there, you're able to go into the sales order, which is on the bottom of the screen here. So you're able to see that impairment, not only from RAR, but drill through to your document flow in SAP down to what was the credit memo that was behind the impairment. All right. And the next slide. So we saw some, so those were both disclosure reports. What we didn't get to, we're going to show you the end of October, or October 24th, is more disclosure reports and also the operational reports as well. But Bramasol has also developed analytical dashboards. So again, you want to, turning information, or the requirement, I guess, into your to your benefit is being able to now see at a managerial level what is the total state of your company, and then being able to drill through your KPIs into the details as well. So John or Julio, you want to add anything to that?
I'm good, Carrie, but maybe
this.
John does.
No, you guys know that I love this page, and we have there's so much information and so much data that comes out of the RAR tool. Yes, it's primarily done to simplify and automate your revenue accounting, but again, the information here is fantastic. You can look at things and understand, today I have a total set of revenue, here's what's been recognized, but here's what remains to be recognized. And you can begin to do some analysis around things like, have people taken advantage of warranties, or have they taken advantage of upgrades, et cetera? And it's just a wealth of information. We're going to cover that in our next webinar. So Carrie, that was a fantastic job. Thank you. And here you can see, by the way, when we talk about the fact that these reports were developed specifically based on the FASB regulations, here you go. Right here on the left-hand side, you can see the actual quote from the FASB. We put in the contract revenue summary, and you can see where all of the reports tie into that, and you'll see that again on October 24th. You'll see some more information about that. So with that, what I do want to remind, and Julio talked about, and we're going to start wrapping up because we're running out of time. We do have some updates coming. We actually heard about some more really interesting updates from the leasing perspective around ROU assets and ROU reversals, impairments, and some things that are going on in the various working group meetings from our friends at the FASB and a couple of working groups that we're involved in. But you can see that we constantly are updating. Future enhancements coming. Going to do the automated ASC 606 footnote disclosure package. You'll see some more on the IFRS disclosure reports. Those will be out very, very shortly. And again, automation of the FASB report, non-cash, around ASC 842 and IFRS 16. And I think, again, the point here is we produce these so that you have tools you can use. We update them on a regular basis. So please take advantage of that from us. I do also want to remind you and thank you to Julio, and for those of you who want to, one of the things that distinguishes Bramasol from everybody else is our technical advisory services. We have experts like Julio and John who have dozens of years experience, practical experience, involved in many projects, and you saw that from their ability to talk about specific case studies that they've been involved in on several different projects. We'll be offering this, and we do offer this to all of our customers. We strongly recommend that you take advantage of this, because whether it's RAR, lease accounting, treasury, any of the finance areas, working capital management, at the core of this is really the accounting. And to be able to have somebody who can sit across the table and talk accounting with you, I have just seen such a tremendous change in the kinds of conversations and the way projects go when folks like Julio and John are at the table with our deep expert consultants. So with that, I want to thank everybody for joining. I want to thank Julio and John and Carrie for putting together such a fantastic webinar. I really enjoyed this one, so thank all three of you very much for that. I want to thank all of you for hanging in there and listening, and I look forward to having all of you on our webinars that are coming up. Again, on October 24th, we're going to focus on this subject in more depth. We'll also be doing some more on treasury management as well, so please join us. Thank you very much, and have a great rest of your day. Bye-bye.